determine how the news applies to real estate investing. My goal is to help you stay informed, make better decisions, and of course, make more money. Let's dive right into it, guys. This is an article I saw just the other day on Seeking Alpha, and the gist of it is this gentleman is trying to make us believe that the United States real estate market is basically mid-cycle. And what he's doing to illustrate that point is he's using a time frame, 1976 to 1989, and then these other two time frames. But the one I want to focus on specifically is this time frame that he uses, 1976 to 1989. And the reason I want to use this is because I want to talk about how important it is to understand inflation, not only to understand it, but to understand how people use it to manipulate numbers to make it seem like real estate returns, or any returns for that matter, are far higher than they actually are. And I want to make sure you guys understand this so you are not duped into believing that a specific investment has far higher returns than it actually has. So what this guy is saying is that between 1976 and 1989, the real estate market went through this boom where we went from the lower left to the upper right. And he's pointing out during the same point of the cycle as we are, as far as the amount of time, that the 76 to 89 boom increased by 20.7% per year. So a 20.7% return per year. And his point is that in our current cycle, we've seen 9.7% returns. Therefore, since there's a big delta between 9.7 and 20.7, that we have all this way to go, and we really haven't seen that dramatic price appreciation since 2012, and it's all just part of your imagination. And if you just look back through history, oh my gosh, we've had all these times of where we've had much more or much bigger booms than we've had. So don't worry about it. We're mid-cycle. Go out there, buy my REIT, buy real estate, and invest with my fund. Okay, well, let's just look at this face value, 20.7% return. Let's go to another chart that's actually adjusted for inflation. You see a difference? Let's point out on the map, let's see, 76, we're about, maybe right around in here. And 89, we're about right here. Wow. That does not look like his chart that was lower left here. Remember, his chart was lower left here and went woo all the way up to way up here. And remember the 20.7% return from 1976 to 1981. In other words, from about right here to about right here. Yeah. So this is a perfect example of how inflation affects numbers and really confuses people, and then how other people that are trying to sell you stuff use it to make you invest in things that are far less attractive than what you believe them to be. So our actual return from 76 to 89 was 0. And our actual return from 76 to 81 was negative. You lost money. In other words, you lost purchasing power. And who cares about money? Who cares about how much your property is worth? It's about how many goods and services your property buys. It's all about purchasing power. So you actually lost purchasing power from 76 to 1981, where according to this article, you gained 20.7% per annum. That is why inflation matters. That was what I wanted to discuss today. And you guys, if you don't understand inflation, watch more of my videos. Stay tuned to this channel. In addition to that, go out and learn. Look at charts that are inflation adjusted. Compare them to nominal charts, whether it's the housing market, the S&P, the Dow, Russell 2000, it doesn't matter. Figure out inflation, because if you don't understand how this stuff works, you're not going to make optimal decisions in your investment portfolio on a moving forward basis. All right, guys, if you like this content, go ahead and subscribe to the channel. Go ahead and hit the thumbs up for me. It really helps out these videos. And hit the notification bell so you're informed of every time that I make a new video. And if you guys have any questions or comments, I know this inflation stuff can be confusing. Make sure that you leave them in the comments below, and I will answer them as soon as I can. See you guys in the next video.